What's up guys, welcome back to the channel. In today's lesson, we'll be talking about ICT's power of trade. The AMD power of trade refers to accumulation, manipulation and distribution. The accumulation phase is a range or a consolidation. Now what we see at the accumulation phase is that price accumulates orders, that is creating buy stops at the high of this range and sell stops at the low of this range. Now what price is doing in simple time is that price is doing what? Accumulating orders at this particular range. Now a lot of orders are placed at the highs and at the lows. These are areas where large money is resting, that is a lot of money is resting at the highs and at the lows. People's sell stops and buy stops are resting at this particular area. Now after the accumulation phase, what we're going to see is the manipulation phase, and this manipulation phase is simply a false breakout, or we can call it a stop hunt. It's simply price sweeping the stops at the highs as well as the stops at the lows. Price is actually also inducing the breakout traders. Now this is what we have after price accumulates orders. We have this false breakout to the downside. Now this false breakout is simply coming to take the orders at this low, because just like I explained, we have large money resting at this particular lows. Price comes, sweeps the money, and people who are looking to trade the breakout, that is the breakout traders, they'll be induced into entering their sell orders at this particular area. Now what price do is we see this manipulation phase. Now after the manipulation phase, what we're going to see is what we call the distribution phase. At the distribution phase, this is price simply moving to the opposite direction after the manipulation. Now after the manipulation, what we see is price moves away to the opposite direction after it must have induced breakout traders into selling. Now they'll be pushed into the wrong side of the market. Price will now move to the correct side of the market, that is the distribution phase. Okay, this is the whole trading setup, and the setup is complete as you've seen it in this particular example or in this particular explanation right here. And the same goes to this particular area where we have a range which we can actually call a consolidation or an accumulation area. Now just like I said, buy stops are placed at these highs and sell stops are placed at this particular low. Now what we see after the accumulation is where we have this manipulation phase, where price comes to clean all the buy stops, that is taking the money at this particular point, and it equally induced breakout traders into taking their buys. But after that, we see price reverse to the opposite direction, that is the distribution phase. Breakout traders has been pushed into the wrong side of the market. So this is a very simple trading setup. It's a very good trading setup if you can build around this. So if you move to the price chart, this is simply what we want to see. This is exactly what we want to see. We want to see price accumulate. Okay, price accumulates. So this accumulation is simply a slow price action. Price must be moving calm at this particular area. This is just a slow price action, no definite movement. After that, we want to see price moving aggressively out of the range where it clears the stop loss below this range. Now after we see this aggressive move out of the range, this is where we'll be looking to get involved, where we can actually look for a market structure shift, where we enter with the lower time frame confirmation at this particular point, then distribution. Now if you can't wait for this market structure shift, I'm going to teach you another entry type which you can actually use to get involved in this particular trade. And this is another thing we want to see right here, where we see a slow price action, price moving calm at this range, and after that we want to see price moves out of the range with large momentum, and we would like to get involved using the lower time frame confirmation, where we have a shift in market structure which shows us bearish intention in this particular point. Then we look to distribute to the downside. And like I said, I will be teaching you another entry model which you can use to enter this particular trade in this particular lesson. Now let's move to the price chart to see a live example. But if you're totally new to the channel, I would like you to consider subscribing to this channel. We are on a journey to hit 50,000 subscribers, so consider subscribing to the channel if you love to see content like this. And just like the announcement I made last week that our course will be very ready in less than 2 weeks, I'm going to release the launching price, which will be very affordable to everyone. So if you want to advance as a trader, you want to be consistent, profitable in the financial markets, consider enrolling into this our mentorship course, where I'll be dropping a step-by-step guide on how you can be a consistent, profitable trader. So you can access that course by visiting our website. So let's jump straight into the examples right now. Now here is the first example, just like I said, the AMD power of 3, where we see the accumulation, the manipulation and the distribution phase. Now what you can see right here is that we are at the accumulation phase, and I just explained that the accumulation phase is where we have a slow price action, where price is moving calm, no clear price movement, because we can actually see this is more like relative equal highs and relative equal lows. Price is moving calm at this particular area. Now we have buy stops at the highs and sell stops at the lows. Now what you want to see is if price takes this particular low, what you're going to expect is price to distribute to the upside, right? And another thing you should note is that if price takes the high first, that is manipulates above the high, we're going to expect price to distribute to the downside, as simple as that. So we're going to press price forward and see how this plays out. And what can you actually see? You see price manipulates to the upside. So this is the manipulation phase we're talking about, where price takes the stops at this particular high. And now what we'll be looking at is how to get involved in this particular setup, because for what you can see, price accumulates, expands, and it takes the stops at this particular high, which is the manipulation phase. So it's okay to mark here with the red box as the manipulation phase. Now what we're going to look for is entry, how we can actually get involved. And the first entry type, which everyone is familiar with, is dropping to your lower time frame to look for your entry confirmations. What I'm basically going to show you is another entry type which is also valid, which you can look to use for this particular trading setup. Now you see price continues to manipulate the upside. Now breakout traders has been induced into taking trades from this area. They have entered their buy position and they're looking to trade to the upside. And now you see price push to the downside. Now what you are seeing right now is bearish intention, and this is where we'll be looking to get involved in this particular trading setup. Firstly, you either drop to the lower time frame to look for entry confirmation, or you use the entry type I'm going to teach you in today's lesson. This is where you're going to get involved, and this is the entry which you're going to need. Right here you can see price showed bearish intention. If I try to move this box, and I'll bring it back after the explanation. Now price shows bearish intention where we have this bearish candle. You see we have two bearish candles right here. Price left a fair value gap right here, which aligns with this other fair value gap right here. Now what you can actually do is you can actually get involved by trading from this fair value gap we have right here. Okay, now your entry will be this fair value gap we have over here. You see price push to the downside, rebalance. This is more like draw on liquidity concept, where we see price drawing back to rebalance this inefficiency we have right here, because this is simply price inefficiency. Price rebalances this inefficiency, and now we see the push to the downside. Maybe if you didn't actually get involved in that particular price inefficiency, you see we have another one right here which you could actually consider to trade from. Okay, you could consider to trade from this particular one, because price left an inefficiency, it draws back into this inefficiency area to rebalance the price inefficiency. So this is the manipulation phase we just talked about, and now what we are expecting is the distribution phase, where we're going to expect price to distribute to the downside. Now we can actually mark that with a blue box, so we know that we are expecting the distribution phase from here. Now this is what you're going to expect, and where could actually be your possible targets. If you want to trade this setup, you can go for a quick 1:2 or a quick 1:3, or you can look to target this sell side liquidity area. This could be a very good place to target if you want to target that sell side liquidity area. So let's press price forward and see how this actually plays out. And you see price starts to push to the downside. So if you still have interest in taking another trade, remember, draw on liquidity. Price will actually draw back on liquidity areas to rebalance inefficiencies and to take sell side and buy side liquidity. But what I would advise you to do is either enter off the lower time frame confirmation, or you take this particular entry setup we have right here. That's the best thing you can actually do for yourself. No need to continue pursuing price, or will I say continuing entering off these areas. Okay, don't do that. That's my advice. Don't try to do that. I see price rebalances that inefficiency, and now we see price pushing to the downside, and see price continues to rebalance inefficiencies. Can price actually get to this particular target we have right here? And you see price hits our target, and this is the complete power of 3 concept. As simple as that. We see the accumulation phase. Price manipulates by moving to the upside, and now price distributes to the downside. As simple as that. Very easy and simple trading strategy. Let me show you more examples. Now here is the second example which I'll use to explain to help you understand better. Now we can actually see another accumulation area right here. you have this low price action here. Price doesn't have any specific direction, it's just moving calm at this particular area. Now what we're going to expect is the manipulation. Now if price manipulates, we look to get involved before the distribution, right? Now playing price forward, what you can see, price manipulates to the downside, clearing the stops at this particular low. What we'll be looking is to get involved in order for price to distribute. Now let's press price forward, and we can only get involved when we start seeing bullish intention. That is where we can actually drop to the lower time frame to look for entry confirmation. I'm not going to do that because if I do that, this video is going to take a longer time, right? Now let's press price forward and see. And you see price continues to push to the downside. Now we have this bullish intention, and from what you can see, price actually dropped to rebalance this price inefficiency we have right here and possibly mitigate this other block we have over here, because we've seen we have something like a shift in market structure at this particular price point. But that's not what I'm actually going to talk about. What I'm focusing on is this power of trade, but this is more like a confluence that is going to help this particular trading setup to play out perfectly, right? Now let's see how this plays out, and what you can see, price distributes to the upside without even waiting to give us the retest of this fair value gap we have right here. Now this is the simple strategy. Now we have this manipulation phase right here. So here is the manipulation phase, and you see price distributes to the upside. If we actually wanted to get involved, that's would have dropped to the lower time frame. I believe we would have gotten a lower time frame entry right here. But if you're looking to trade from a fair value gap on this time frame, this is where you would have looked to get involved in this particular trade setup. And you have to keep in mind that once you are entering from this fair value gap, your stop loss would have been placed below here. But what we can see is that price distributes to the upside without actually coming to rebalance this price inefficiency right here. And you see price is now distributing to the upside. You see now price has retraced very close to this fair value gap. So let's see how price is going to react to this particular area right now. Now from what I can actually see, price is now giving us another slow price action right here. So this could be another accumulation area. You see that this could be another accumulation area because price is giving us a slow price action right here. No clear movements at this particular price point. And after this little accumulation, what can we actually see price do? It continues to accumulate. As you can see that the accumulation continues. And if you try to look, this is more clearer accumulation area right here. If you don't want to include the whole of this side, this one is more clearer right here where we see this low price action at this particular area. And after that, what you see, price manipulates to the downside. You see after the accumulation, you see how price reacts massively to the downside. That is the manipulation phase. If I try to extend this zone, you see price comes to rebalance this inefficiency after this manipulation phase. Now it's also nice we have to mark this as a manipulation phase with the red box. So here is the manipulation, right? Now let's see how price is going to distribute to the upside, and you see price manipulates, it continues to push to the downside. That's the manipulation phase, and it comes to rebalance this inefficiency that it failed to balance initially. This price drawing back to this particular area. Now what we're going to expect is the distribution phase where we're going to see price distribute to the upside. But before this distribution, we want to see bullish intentions that is going to tell us that okay, the buyers are ready to get involved in this trade, because we're still seeing price continue pushing to the downside. Okay, so we're not looking to get involved right now. And now you see bullish intentions right now, price is pushing to the upside. Now you can look to get involved using the lower time frame entry type, or you can actually wait for price to come back to rebalance this price inefficiency right now. But you see price continues to distributes to the upside. So this is the simple strategy. Just like I explained, this strategy occurs almost every day in the markets. That's if you can spend your time trying your eyes to see it on the price charts. Now this is what we have. You have two great examples right here. Price accumulates, manipulates, and distributes. Now while price was coming to rebalance this inefficiency, we see another accumulation area right here, manipulate, and we see this distribution to the upside. So this is a very sweet concept. Okay, I call it sweet concept because the concept is very sweet to trade. So this is going to be the last example, and we have to round up. Now what you need to understand is that this strategy is a very good strategy. What you can actually do if you want to combine it with time, so it will be a time-based strategy. You have to learn about the London kill zone. Okay, learn about the London kill zone, because this is very similar to London kill zone strategy. The only difference is that London kill zone is a time-based strategy. So I'm going to link that video in the description, and I think I have to put it in the card. So if you want to learn about that, it's a very, very good strategy to learn and master if you want to be profitable in the financial markets. So let me round up with this particular example before I end the video. And like I said, if this video is helpful, consider dropping a comment and dropping a like on this particular lesson. Now what you can see is that price is pushing to the downside. Now we have this accumulation phase, and what we're going to expect is price to manipulate. Then we look to enter off the manipulation area and expect price to distribute, right? We're going to look for entry during the manipulation phase, and we look to distribute to the direction that is the opposite direction of the manipulation. Now playing price forward, what can we actually see? Now you see price manipulates to the upside, and this manipulation phase is not actually too aggressive, like an aggressive manipulation like we've been seeing, but this is still a very good one. But at this point, we're not seeing bearish intention yet, so it's actually nice if we mark this manipulation area. Now playing price forward to see how this actually plays out. Now we see price continues to manipulate, and now this is where we're seeing bearish intentions, telling you that sellers are looking to get into this market after this manipulation phase. Now this is where we look to get involved, and it's nice to look for lower time frame confirmations at this particular area. But if you don't want to look that, you can look to enter off this fair value gap we have right here, because from what you can see, price left this price inefficiency, so we might look to enter off this inefficiency we have right here, because price will always draw back to areas of liquidity. It doesn't happen always, but we usually see this on the price chart. So let's press price forward and see how this actually plays out. And now you see price comes back, rebalances this inefficiency, and we're seeing that reaction to the downside. So we're expecting that distribution from here. And remember, if you're entering off this inefficiency, your stop loss should be placed above this particular high we have right here. So now we're expecting the distribution to the downside, right? That's what we're expecting, price to distribute to the downside. Okay, now you see price distributes to the downside. So this is a very, very simple strategy. Just like I said, what you have to do is you have to go to the price chart and practice now. But in this case, price didn't distribute much. What we have here is 1:2 risk reward trade. That is price presents 1:2 opportunity right here. So if you took it, it's going to be a very good one for you, because right now we've seen price returning back to this particular area right now. So this is a very simple strategy. Just like I said, go back now and practice it. So thanks very much for watching this, and see you in the next one.